Seen improvements in the performance of the NSC yesterday and today. What do you make of this performance?
The index picked up a little more, 14.7 points. A slight improvement compared to yesterday's position, backed by gains on key industries like KPLC, Mumias, and EABL. Key is KPLC, who are about to announce their full year results. We are very positive, expect double-digit growth in line with the continued recovery in the economy, which backs increased consumption expenditure, which translates to increased production capacity.
Right. Now,
EABL's position...
Yes, go ahead.
EABL's strong position is supported by strong earnings that they reported 2 weeks ago, which saw them increase their dividend payout compared to last year's position, backed by the strong operating performance that saw the operating cash flows increase. This is why foreign investors have taken a keen interest on the counter. And going forward, it's expected that the company will sustain the current performance. Our projections place it at a double-digit growth of 10%, at least for the next 2 years. So we continue to take a long-term view on this, which is equally shared by our foreign investors.
All right, let's talk about other counters, because the stocks that got a lot of activities and gained today seem to also be TPS East Africa and Bamburi Cement. What drove these ones upwards?
TPS East Africa closed their rights issue recently. They did also announce their half-year results a week ago, reporting strong earnings growth, backed by the strong recovery on tourism sector in East Africa, which is supported by a recovery of the global economy, particularly on source markets like North America and Germany. The position on Bamburi is more of a long-term view based on the expected strengthening of key markets, particularly Uganda, where the installation of the new cement production plant is expected to support growth on the top line.
All right, let's talk about another stock that also gained today, and that's CFC Stanbic Holdings. There's been a buzz in the market recently over the possibility of a merger with Liberty Holdings South Africa. What do you make of this partnership, and what do you make of the stock?
Currently, the expected demerger is at the regulatory stage, with the shareholders having already approved it. We do expect that the regulator would equally approve the issue. As analysts, particularly Sterling, are positive about the move, because we do expect the demerger to remove the informational inefficiencies that had been earlier created by the merger, particularly the conglomerate structure that was there. The entry of Liberty as a key anchor shareholder is expected to deepen management and hard experience. And in view of this, we do expect that the listing of the insurance business separate from the banking would equally deepen the market by adding an extra security to the market.
Let's talk about Safaricom. We know it's shown recovery during the course of this week after these very, very aggressive price wars with Zain that have started to emerge. Yesterday hitting the 4.90 shilling mark. How's that stock performed today?
Safaricom lost 5 cents in today's trading, recording a very low activity below 2 million shares. We interpret this to mean waning demand on the counter, as investors hold back, waiting to see the kind of long-term strategies that the management of Safaricom will put in to fight the stiffening competition that has seen new developments of reduction in tariffs downwards. It is expected that Safaricom will come in strongly to defend their market share. And therefore, we expect the counters to strongly hold, at least above 4 shillings and 50 cents. But the long-term view is that of growth in their earnings.
Okay.
And we expect that demand in the long term will be coming through.
All right, just in terms of your medium-term outlook for Safaricom, many investors say that they need to see the stock hit the psychological level of 5 shillings. What's the likelihood of that happening in the next few weeks?
If you look at activity on the counter, it's been largely driven from the foreign investors. And we do expect that activity levels will pick up, and that is likely to drive the share back again to above the psychological level of 5 shillings. Our own valuations place the intrinsic value at 6 shillings and 75 cents, and supported by the strong half-year results that we expect in about a month's time, we do foresee strong price levels above 5 shillings.
All right, let's talk about the shilling itself. It eased against the dollar today, and the slide is blamed on oil traders coming in and demanding dollars. But there's also a view that the CBK has had a hand in this. What do you make of the shilling? It's trading above 81 shillings 25.
CBK's move is basically meant to improve, or rather increase, the import cover, which is currently at 3.3 months. And the increase or the strengthening of demand, increased demand on the dollar is what has seen the shilling weaken. We take this to be more of a short-term position and expect the shilling to stabilize at least at around the 80 shillings level in the next few days. Short-term positions taken by bank dealers are mainly to speculate, backed by the creation of demand by CBK.